Hi, everybody. Welcome to IC Markets Market Commentary. My name is Adam from Trade with Precision. So first of all, let's run through the market. It is a couple of things worth noting is that it is obviously now August and we head into September, which can seasonally or historically tends to be a relatively bad month for the indices. I'll show you those in a moment, but also we can see some movements with the US dollar. So one of the things I want to highlight here, first of all, looking at euro dollar here, as we can see that price has indeed started to trend upwards. We have a confirmed uptrend, nice bullish engulfing candle on the weekly, and we've started to break outside of this converging triangle here. So we're starting to look more and more bullish, which supports the idea of a weaker US dollar. If we have a look at sterling, sterling is still in an uptrend. It is having quite a bit of a deeper correction at the moment, but this has also broken outside of this pennant triangular sort of compression shape that it has been stuck in for a while. And then, of course, if we go and have a look at gold, gold is still within this range. Some failed attempts so far to break outside of that, and we're seeing price coming back down. So both with sort of the euro dollar, we're seeing a bit of weaker US dollar. With gold, we're seeing a bit of weaker gold, and with sterling, a bit of weaker sterling as well. So we're getting some mixed signals there, but the point really is that we are not necessarily seeing too many trends just yet. Let's have a look at crude oil. So crude oil is going the other way. Crude oil has started to break below the lows of this triangle right now. It's testing a level of major support. We've got a lower highs, lower lows, so it's slightly more bearish than bullish. So gold is having a bit of a correction, but we can see the crude oil is looking more bearish than gold. Then let's move on to the global indices, and here you can see we had a recent correction. So this week a lot of people were a bit concerned because Monday was quite a strong down day. You can see here we've had a couple of good strong down days, but today when I'm recording this, we can see we've got a good strong recovery, which could then lead to a nice strong bullish bar. And so overall we've had a general bullish pattern forming here. We'll see how this plays out over the coming weeks, because as I said, remember that September can often be, I'm going to go here to monthly and I'm going to show you this period over here is last year going from September through to October, and then we had the recovery in the Santa Claus rally. We're exactly the same sort of period over here with August, September, and October. This is kind of where we are. And so the interesting thing is, and this is something that happens often, will we be seeing a similar type of effort this year? We're going to have to see. So currently, as I speak, we are getting a nice strong pushback from this, but we could still see, if we look at it from a monthly perspective, we could still see a potential deeper correction. So we're going to have to see how that plays out. In other words, the question comes down to, are we looking at simply a weekly retracement here, a weekly correction, or a monthly correction? And that's really what it comes down to. So I'll be paying the most attention to that, but I wanted to draw your attention to it. And in so many ways, the economies are doing really well. I'm not concerned about it. The media can really dramatize everything and convince everyone there's going to be a recession and the sky is falling. And this is one of those periods where Warren Buffett would simply sit it out, wait for the good correction, and then start buying up. And so this is a really potentially is going to be that. And that's something that I'll be having a look at over the coming weeks to see whether, what the extreme correction or what the size of this correction is. I'm fumbling over my words today, not really sure why. Let's have a look at the NASDAQ as well. So again, going to that weekly, you can see a beautiful correction off that 50-period moving average and forming a bullish candle at this point in time. Then we have a look at the FTSE. So again, the FTSE, looking at that, we've had a nice correction to test the previous level of resistance. Potentially we'll have had a nice pullback and a nice bullish setup to keep going. The DAX as well. So again, look at the DAX to get some perspective. You can see, especially when we look at it from a monthly, getting that monthly levels in sight here, we can see we've got a nice pullback into the moving averages. So for the most part, what we're really seeing here is that we haven't had a really big retracement on the monthly timeframes in a year. And so that appears to be what is happening currently. And no reason to panic, just it is that it's simply a retracement. One thing I want to talk about here is the ASX, the Australia 200 here, was forming a little bit of a triangular, again, also forming one of those pressure points, but also broke out to the upside and has come back down. So swinging quite wildly. In this case, I would probably be focusing on the monthly timeframes. And here it makes a lot more sense. Just a failed breakout, and therefore we might test this level for a bit more support in the coming days. Let's have a look at Tesla. So Tesla did do an inverse head and shoulders, looked very nice and bullish. It's doing a very big correction now. It's gap below this 200 level. It's coming back up to test that. It's currently sitting at 202. It may simply be looking to close the gap and then continue down in the same way that we've seen happen here. So it's going to be interesting to see where we end up by the end of the week, if we end up hitting lower, because if we do, that means that 140 level is back on the table. All right, let's have a look at NVIDIA. NVIDIA doing a really nice correction. This is where the monthly gives you some great perspective. Really nice correction, very much overdue. Beautiful for that. Let's have a look at Amazon. Amazon as well from a monthly perspective, looking good. It's broken through this level of resistance. broken up through that level of resistance and pulling back into the moving averages. In every other way, it looks fine. And then finally, let's have a look at Bitcoin. So Bitcoin here is starting to break below this range. I highlighted this range before, and we've just managed to dip below it and then go back up into it. So across the board, we're seeing a little bit of a correction. It is that time of year, so it is a seasonal thing. It makes sense, an annual type of repeatable behavior. And of course, but what that does is that means that there's increased volatility in the markets. It means that we should either reduce our exposure, be more cautious, manage our risk, but also stay calm. There's no reason to panic, and there isn't anything new that hasn't happened before. So we need to just use this as an opportunity to learn, to watch how other people panic. And this is where we could see those really good opportunities, especially with regards to those indices. They've been due for a correction, and here is the very correction we've been asking for. I'm going to leave you with that. Plenty to think about and lots to look forward to. Thank you.